All right, welcome everyone. Hope you're having a great day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number one in the chat box. Let me know that you can. I would greatly appreciate it. All right. All right, all right, all right. Let me actually get my screen shared here. Afternoon, Jim. Afternoon, Kevin. Good morning, Helen. Hope you guys are all having a great day. Let's see, where is this? Okay. Video. Oh, let's open that up. There we go. All right. There we go. I appreciate it. Thanks, Andrew. Merry Christmas, Bonnie. Not yet. Not yet. A little too early for me. I'm just not there yet. Although we did go out this weekend and pick up a new Christmas tree. The one we bought when we got married in 1990. It's an amazing tree. Probably the equivalent of $700 or $800 today. In great shape. It's not pre-lit and it's a lot of work. I put 1,000 lights, 1,200 lights on it. It's a lot of work doing that every year. So we went out this year and bought a brand new tree with that's pre-lit. So it's coming this week. We're getting the delivery. And none left in the store. So, all right, as we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. So we've got our agenda for today. We're going to go to our follow-us page. We'll go through trades from today, whatever trades you've done. A few that I've got here, economic reports, market review. Then we've got upcoming trainings. We have our topic of the week and your stock review, which is where you get a chance to ask me to look at the candidates that you have an interest in. Here's our follow us page. All of these you can go right to the social platform and follow along with, except for the Trading Post. Trading Post is a newsletter that you have to sign up for. It is free, but it is not something we just add everybody to. We've got a couple thousand people on that list now, so we get some good feedback from it. So it's trades before the market opens up of some potential stuff of what's going on. So again, check that out. Andrew can drop that link in for you. Today's trades. What trades do you all want to? What trades did you all do today? It could be today. It could be something you did the end of last week, especially with a shortened week last week, because you had no Thursday, a couple hours on Friday from 9:30 till 1, and that was it. We were gone at 1. I didn't do any trading on Friday at all, really. I stayed, for the most part, I stayed away from it. Let me go find my chat box. See where the heck that went. Oh, there we go. All right. It's not on my screen anymore. I'm like, what the heck? Trip said only one scalp this morning, but I got 38% on AMD in 6 minutes. Nice. Good trade there, Trip. And I understand. I struggled to find anything today. I found one that I just did one contract. I was not excited at all. It was okay. Um, and no trades for Brenda today. Exactly. With where the market is, what's happened with the overall positions right now, so many stocks being knocked down and just in weird positions. The moving averages are kind of messed up on some of them. For me, the only thing today, and Bonnie said today sold covered calls on Oracle. Good for you, Bonnie. Very nice. Coinbase had it was in a bearish neutral bias and it gapped down. Let's unscrunch that. All right, there we go. And it gapped down today to right here. And then it stretched right back up again and failed. It basically put us in a bearish bias rank of 1 as we got there and rolled over. If we look at a 5-minute candle, let me zoom this in a little bit. If we look at a 5-minute candle, you can see there's the gap down. We ran up, we closed right there, broke above, broke below, came again, closed really close, stretched back up, failed. It wasn't until this candle, I think right about 63 was the entry. This is 64, 70, 63 and a half, somewhere around there. I don't remember the exact price of the stock. And then we had this nice, strong, bearish thrust We went sideways up, sideways down, sideways up. Quick little move up, and then as it started to run on this candle, it was right about 56, I think, ish. Is when we pulled the trigger and said call it a day. I mean, it hit a low of 52 and a quarter, so it was crazy. Um, let's see. Trip said I was distracted with the HVAC guy fixing the heat. Yeah, but cold. Okay, I get it. Um, Patty said Lily um, minus $45. Mastercard up $15. Okay, not bad. You managed your loss to a small amount, which is good. Amelia said 10% on Nvidia, 11% on the Qs. Very nice. I love hearing that. Um, so if we look, where is it? So here are the trades from Pop from the end of last week, from Tuesday, Wednesday, and Friday, which was a half day, right? But they were all Tuesday and Wednesday, nothing on Friday, right? So Broadcom, you see, we got in the stock was at 375 quarter, got out at 395.90. We're up $1,610, $11 on one contract there, right? And then we had, that was on Broadcom. There were two Carvana trades, 25th and the 26th. We're up 1,600 on one, 382 on the other. And then the SPY, we did 10 contracts. Well, we did one contract. This is our one contract trades. We did 10 in regular pop, and we're up $140, $3,771 for Tuesday, Wednesday, Friday of last week. And it puts us at $172,191 for the year on one contract trades. So cannot complain on that at all, right? It's been a great year for us in power option plays this year so far. But that's it. I've not done much else. And markets conducive of it. We'll talk about S&P in a minute, but the markets are conducive of it. I mean, we've got great moves up, but then you start looking at, AMD, we're kind of in the middle. We're in the middle on Amazon, APP. We gapped down, ran down, didn't really bounce, moving averages, I guess, but we didn't bounce off a key level. Gap down on a bearish overall, nothing. 4 days in a row, just boop, heart attack time, right? Coinbase and Costco and so forth, right? So there's a lot of stocks that are just out of position. They're not set up properly, right? And that's what it comes down to. And I got to tell you, some of my favorite days in the market are the days when nothing sets up and I just know I get to walk away. It's kind of a bonus day. Ooh, I don't have to do anything today. I can leave. And I just get to walk away, right? And days like that, where you look at, who was it that we just had this sideways yuck here on Booking? Granted, not a lot of you will be trading Booking, but you see these 4 days in a row. I get excited about that. Number one, there's pressure building up in there. It's going to break. It's going to break hard one way or another. It's going to break the 8. It's going to break the 21, either or, but it's going to break, right? And if it breaks to the upside, it's got a 25, 75 rather, 85 point move to the upside. Breaks to the downside, we got a hesitation at the 8, which is at 48.80, but then 48.10, almost 100 points, 90 points move to the downside. So there's a lot of opportunity there when it does break, but we're getting a lot of this. And to me, this has always been a day off. Great. If everything looks like this, or the stocks I wanted to trade today look like this, and nothing's happening, sayonara, I'm out. I'll go find something else to do. Because you don't have to trade every day. Right, let's go look at some economic reports that we've got out there. All right, so we got a lot happening, and none of it listed as tentative, which is great. So right now, ISM was a 10 o'clock report, so was the manufacturing prices. This would be a number one, right? It's red, market's open, it's a number one. The orange becomes a one by proxy just because it's hanging out with it. Fed Chair Powell speaks 8 o'clock tonight. I wonder if there's going to be any conversation, or I don't know if they're going to ask questions or not, but if there is, if anybody's going to bring up, Trump's already said who he's got picked for the next Fed chair, if Powell plans to leave, blah, 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 which could affect the market. There's a lot of concerns, not the right word, but a lot of interest right now in who that next Fed chair is going to be. If you know anything about Trump's position on the market, If you know anything about his position on the Fed, I think it's going to be somebody aggressive that has already told Trump, yes, we will be dropping rates quickly. Is my guess. Again, there's differing opinions as to the validity of that. Some would say, yeah, just drop it as low as you can now and it'll be great. But then there's other things that we've got to be concerned with as well from an economic standpoint. So maybe, Bonnie, I don't know. I'm not sure. Who it's going to be. That's just it. I mean, Trump hasn't called me yet this week to give me any updates, so I'm pretty ticked at him. So tomorrow, 8:15. We've got ADP. That's going to be a number 2. It's only really going to be important to you if you're trading futures. Number 1 for PMI, Purchasing Managers Index. It's on services. Thursday, 7:30. It's orange. It's a 3. 8:30 is a 2. And then all of these on Friday are going to be a 1. Markets open 10 a.m. Eastern. And they're all red. So core PCE, which is price index. Then we've got consumer sentiment and inflation expectations, all coming out at 10 a.m. on Friday. So there's some value in there. So you've got to keep your eyes open to economic reports every day. You should know what's coming out. Even if you're not trading, there's an energy stores report coming out and you're not trading energy, you still want to know that that's coming out, because could something happen in there that could drastically cause a problem? Could, in the middle of an OPEC meeting, Putin makes an announcement that he doesn't care what the U.S. says. We're going to sell oil to more places in China and more places in India and more places wherever. And we're going to flood the market with very cheap gas, and U.S. gas, oil is going to drop down to only be able to pull, $43 a barrel for it because we're going to sell it so cheap. And it's happened before. Russia has dumped energy, oil, and they've dumped steel. I was in the steel industry at the time, and massive dumping. Massive dumping. And I did everything I could to prevent the owner of the company from buying the steel, going around me and just buying the steel. Going to my purchasing manager and say, I don't care who he wants to order it from this company instead, because of how much cheaper we could get it. We would pay, $22 a ton, $24 a ton, whatever it was, for the steel, regular cold rolled steel in coils. And then someone comes in offering it at $14, $16. You just can't. You can't. I could. It wasn't my money, right? The owner of the company's like, yeah, I don't care. We're going to buy it. Because they swore. They came in and you would ask, is it Russian steel? It's not. Nope, it's not. So yeah, it was. Thanks, Jim. Jim said, way to go, traders who traded agreed. Sideways day. It'll most likely break up or down. Yep, I agree with you. Okay, good. Okay, let's go back into the presentation. Market review. Let's go look at the S&P 500. All right, so we drew this new fib a week ago, right? We actually drew it off of this date here, which was on the 24th, which was Monday of last week, right? We drew it off for Monday in there. And what happens? We run up, we go to another high, we pull back, right? First and foremost, the most important thing that has happened that I'm excited about, is we broke through this recent swing high we had. It was a lower high. We now have a higher high. Can we put a higher high in there at this point? Yes. So on Wednesday, could we draw? And you don't have to put the answer in the chat box. Just answer it though. Was this a higher high? Yes. Can we draw the line there to declare that to be the higher high that we're looking at for the next time we have to break? And that's the question I have for you. Do we draw a line there and say that's our higher high? Right? A few more seconds. The answer is no. No, what do you mean no? It's a higher high. Yeah, but we do not have any pullback yet. Remember, swing low and swing high requires something. To have a swing high, you had a high, you had a higher high, and then a lower high. Doesn't matter how much lower. It could be like this, right? It could be a high, a higher high and a lower high. Doesn't matter. It's the same thing. Now, you may interpret those two patterns differently, but to get this high or this high, you need that pattern to happen. A high, a higher high, HH, and then a lower high, LH. A lower high. And that's the same thing that happened on this one, right? The exact same pattern that's there. Okay. So, no, it's not a higher. It is higher, but it's not what we would call a higher high. This one here, yesterday, Friday, whatever it was, it's higher, but I would not be snapping a line on there. Now, if we stay there, even now, I should not be snapping a line on Friday. Because what happens if we move higher today? I don't want that me interpreting that as a signal of, all right, we hit that high, we roll back over it. I don't want anything read into that. And I don't want to have to mentally remember, oh yeah, that one's not real. Then why put it? Then why bother? Right? If that's the case, I'm not going to bother. Now, we have already violated the 882. So if we add an 882 in there, right here, we closed above it. Friday, if we stay where we are right now, we'll close above today, but we're above it. This fib, in essence, when we're ready, we've got to find a new place to draw. All right, when we're ready, we've got to find a new place to draw. Now, could we go back to using this previous fib? Yes, we could. It's very possible. Right? We've really got to see how it all plays out. Brenda said, just got filled on SPY puts for, wow, Brenda. Brenda, you're trading insane numbers. Congrats. Holy mackerel. So where are we at? If we stop where we are right now, and this is it for us, we would be sitting at a bullish bias with a rank of 2. Let's identify rank for a second here. All right, let's go through that real quickly. What is a rank of 1? All right, right here, this candle right here is a bullish bias U with a rank of 1. Why? The stock closed near the fib line and the moving average. That puts us in a rank of 1. Where we closed Friday, that's a rank. Oh, no, not there. Sorry. Well, let me just skip that one for now. Try and do it in order. When we closed on this candle, this is a rank of 2. We don't have a moving average there, but we closed near that fib line, so it's a rank of 2. Where we closed here on Friday is a rank of 3. It's kind of in the middle of these two fib levels. So if you do nothing else other than incorporate this type of a system in what you do, you've just said, why would I trade number 3? It's not near a key level. Why am I interested in it? I'm not. Here, let me see. Let me get I need the other pop tracking sheet open. I've only got the one contract open right now. So this is an older, whoa, where is it? Oh, I got lines run. This is an older sheet. When I look down this rank column, and this one was from November 21st. When I look down this rank column, I have nothing that's a 1. So what does that tell me? Let me see something. Let's do this first. Okay, there we go. Let's use this one. So what is that telling me? There are 1, 2, 3, 4 stocks that I am looking at first thing in the morning when the market is getting ready to open up on this, whatever this next trading day was. So that Friday the 14th. There are 4 of them, and it's going to be Adobe, Amazon, Costco, and Goldman Sachs. I do not need to go back and do this big, massive reanalysis of it. I did the work yesterday. Again, day before this, the trading day. I already did the work the day before. I do it every day before. It takes me less than 5 minutes to fill the sheet in every day. All right, less than 5 minutes to go through. It's fairly quick. Well, those 4 are my top ones. So I'm going to have a template open on TradeStation that I put those 4 symbols in. Then I'm going to have another template because I've got my what I call my 4-pack on TradeStation. I've got that open on 4 or 5 different monitors. It just depends what the day looks like, right? On the next monitor, I'm going to have APP, which is a rank of 2. I'm going to have Broadcom, Home Depot, and then all of these. Netflix, Oracle, SPY, and Tesla. So 4, 7. So I've got 4 candidates that are number 1 and 7 that are number 2. I don't need the number 3s. Unless we get a big gap one direction or another, I don't care. I don't care. So for me, my number 1s will be on the screen. Remember, I have 6 monitors. I've got 6 monitors. There's 3 on the top and 3 on the bottom. My number 1s are going to be here. My number 2s are going to be here. Now keep in mind, I am sitting right now square onto this monitor that I'm teaching off of, which is where my number 1 is on the screen right now. If I turn here, I am now square on the center monitor. And if I turn here, I'm now square on my last monitor, the one on the far right bottom over there, right? And then of course I just go from this monitor to this. It's easy to go up and down, which is why I put 1 here, 2 on the top. Well, by setting it up this way, I know what's right in front of me is the most important thing. And I know I need to keep looking up and checking to see if anything is hitting a key level or bouncing or breaking out on all those number 2s that are up above. The number 3s will still be on a list somewhere, but they're not going to be on one of those 2 pages. They'll be on another list with all the candidates listed out there. Okay? And I still will check them, but it isn't the first thing I do. So I've given myself an opportunity to find the best probability candidates. Now, keep in mind, this was done when the market was closed in an evening. In the morning, I go back, 10 minutes before the market opens up. So, 9:25, 9:20, somewhere in there, and I reanalyze it. If we've moved away from that, then I just change the number to whatever it is. Doesn't matter. Right? It just, I set it up for what's going to work best for me. Number 1s, number 2s, maybe the 3s are going to work today. Maybe 1 or 2 of them are. But if I've got 4 1s, and what did we say? We can't count the top 2 because that's the S&P 500. So forget about this one. Right? Forget about that. You got 1, 2, 3, 4, 5, 6, 7. You got 7 and 4. 11 of our 11. I can't even do it with my nose. 11, right? 11 of our 20 candidates are potential setups. That is an amazing amount of potential trades there. If we go back a week, you got 1 number 1, 1, 2, 3, 4, 5, 6, 7, 8. You got 8 number 2s. You go back from there, we've got 1, 2, 3, 4 1s, 1, 2, 3, 4, 5 2s, right? So 1, 2, 3, 5. So we got 10. So there's about half of our candidates each day present themselves as an opportunity from the night before. But half of those are going to move before the market opens, and they're not going to be set up where you want them. Doesn't mean they're gone. They may gap away, pull back, and retest from there. And that's okay. But these ranks, we're looking at the S&P, which started all of this. These ranks, so right now we're in a rank of 2. We're in a bullish bias with a rank of 2. We're near fib line. We're not near a moving average. So can I take the trade? Yes. But here's the thing. If I were taking a trade, forget about good setup or not. We're going purely off of, this is a 1 right here. This is a 2. And this is a 3. Okay? Based on that, so what is this? We're in a bullish bias. On the first one, we're in a bullish bias, rank of 1. So what does that tell me? It means I could do, if the market is moving in my direction, if the market's bullish and the market is moving up today, I would do 10 contracts as an example, my full allotment of my trade. Now that could be 10 contracts, that could be 5K, it could be $500. Doesn't matter what the number is. 500. Doesn't make a difference. If I am looking at this number 2 right here, I am going to, and assuming the market's bullish and the market's going up today, I'm going to do 4 contracts. Right? If I get a trade where we closed here at number 3 and we get a gap, let's say we gap down to here today, just like we did on this day. If we moved up and we failed off of there, and it retested and it gave us a true bearish connotation, then for me, I might consider just doing a bearish setup. Sorry, persistent phone caller. If we gap down like this and then retested and failed, I would consider, if the market was going down, I'd consider a day trade just for today, but I would only do 1 contract. So I didn't like on Coinbase today. If you look at it, we were in a bearish bias, but the market's up, going up. So I'm going against the market. So 1 contract, right? So everything, it's building out your risk piece by piece. You know, it's funny. I talk about this 100 hours to become an expert in anything that you do. Let me ask this. Does anybody else obsess on, if you're trying to learn something new, does anybody else besides me obsess on that thing, whatever it is, whether it is you want to be a better bowler, you're trying to play an instrument, fishing, I don't care what it is, but does anybody obsess and just dive head first right into it to learn it, to really obsess yourself with the learning component? Just put a 1 for yes or a 2 for no. Patty said, yes, sir. Okay. So Patty, you and I, right? I do. And there are others typing in as well, 1s and 2s. I definitely do. Right. And I am a firm believer of that 100 hours, 18 minutes a day for 1 year, 100 hours, more than 95% of the people in the world on that subject, on that topic. Doesn't mean you're an expert. Doesn't mean you're a professional trader. Doesn't mean you can, play guitar for Jimi Hendrix, right? It has nothing to do with that. It's how are you compared to the rest of the world? It's how much have you learned over that time period, right? And then, of course, you've got those that the cream rises to the top. That's where the pianist who becomes a world-renowned expert, right, will shine after that. So anytime I get into something new, I do just that. I dig in and I put in about 100 hours. And so I don't cheat, but I do. And what I mean by that is I'm probably normally 60 to 80 hours into something before I start making decisions to do it, right? So I was telling my team today, I ordered myself a new tool yesterday. Go figure. I bought more tools. And it is a 3D printer, right? And I've spent in the last 2 weeks, a little bit in the beginning, a lot more this last weekend. I've spent about 60 to 70 hours delving into that and what you do and how it works. And inside of some of the videos I saw, someone has built out a system for plastic containers that would go in drawers, and it's a grid system. Right? It's called grid something. I forget it right now, but it's a grid system. And the way that it works is, it seems complex when you first look at it, but everything is pre-dimensioned, meaning the plate that goes in the bottom that holds all the drawers are the same exact size. You can put some filler in there so it doesn't shake around, but they're the same exact size. You don't make drawers just to fit that drawer. You make drawers that fit, so everything is interchangeable. You can move them around, right? And that is the trading system that I'm talking about. It's interchangeable. Rank of 1, rank of 2, rank of 3, right? And then there are ways to trade each of those. They're not traded equally, right? And it's no different with the grid system. You've got the same base idea, and we've got the same set of ground rules. Ground rules for my system is a rank of 1, a rank of 2, a rank of 3. Bullish, bullish neutral, bearish, bearish neutral, and neutral. 5 different ranks, 1, 2, 3. That's all it is. And from that page, from this sheet, I know exactly what I'm looking to do. And then I don't have to look very far. If AMD decides to do what I wanted to today, it already says we're doing a day trade, right? And now we're a neutral bias rank of 1, right? More favorable to me would be Amazon, bullish bias rank of 1, right? But there are patterns and things I look for. So if I'm a neutral bias with a rank of 1, let's see. Let's go back up. Funky one with it being sideways. Just trying to see if I've got something with a neutral one. That's not in the sideways pattern. All right, so right here, we're at a neutral bias rank of 1, right? Yeah, rank of 1, because they had the 55 right here. So we closed on this day. On this day, it wouldn't matter. So on this day. So do I have a clear path up to my next resistance, or is there obstructions in, some kind of obstruction in there, an obstacle course? Yes, the 8 moving average is in there, so I don't have a clear path. So I would not be as excited about this. But if that moving average was not there, if this moving average kind of continued here and it was never over here, and we closed right there on that candle, and we bounced that next day, damn Skippy, I would take a bullish entry if the S&P was up on that day. Right? So it's analyzing what you see on the chart and having a set of rules based on in computer programming, right? Is Rick in here today? Trip is computer programming, right? Let's see. Sorry, a lot of you in here, guys. I'm just trying to scroll down. Rick is not. So Rick, Trader Will, anybody that's got a computer background understands, and others as well, but for sure, those with computers, especially software, if-then statements. If this happens, then do that. I remember that stuff from back in programming the Commodore 64 I had 150 years ago, right? Great little computer for what it was and when it was. But if-then statements. If this happens, then do that. You need to develop a series of if-then statements for your trading to be successful at it. And that's all it comes down to. If this happens, this is what I'm going to do. How do I know it works? You paper trade it, non-funded trading first. Then and only then do you attempt to put real money in that trade. Yeah, it's a definite learning curve in them, Jim. I do a lot of woodworking, right? So this is going to be some jigs and things like that I don't have to make out of wood. And when I'm trying to, build out a series of holes that you would, plot on a clock, let's say, you got to get pretty darn perfect with that, right? And I could do it, but man, all it takes is one line to be off by a 32nd of an inch. And by the time you compound that error all the way around the clock, you're off by an eighth, a quarter, right? It's too much. So much easier to just say, boop, 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 computer program, hit enter. And there's thousands of people have already, tens of thousands that have already created projects that are out there for free. It depends, Patty. It's, I don't know what from an inch size, but the one I got is 256 centimeters square, and you could probably get about 8 or 10 inches in height on this one. And there's also, there's something I want to make that's a little bigger than that. You just make it in 2 pieces, and then you glue it together, right? So I've got a good break point of where we can do that from. So S&P 500, we're in a bullish bias rank of 2. What do I now? If we're doing this here, we're doing this on the SPY as well, right? If the SPY looks just like this, what do I want to see? Move up a little bit, close here, move up a little bit tomorrow, retest and bounce. If it does, 68, 67 is resistance, or whatever it is on 687, whatever it is on the SPY is going to be my resistance level. Okay. If it fails, breakdown, retest, drop, and the S&P is going down, market's going down, SPY, of course, going down, then I'll take the down trade. I got no obstacles in my way, right? You've got to have a plan of what you want it to do, what do you plan to do? If this happens, then what's your next step? And some of your if then needs to be, if nothing is setting up, then I'm going to go play golf. If nothing is setting up, I'm going to go fishing. If nothing's setting up, I'm going to go back to bed. I don't care what it is. Right? I just care that you've got a plan of where you go next. So, we look at S&P, let's look at VIX. Or not. Okay, there we go. So we're low on VIX right now, nothing crazy, big drop in the last 5 or 6 days. It's been outstanding, right? Just what a great move. We're sitting at 1682, call it 17 right now. We're in the higher end of the yellow zone, which goes down to 0. Doesn't, but that's where it starts, but it's never been at 0 before. So do I like it? Yes. Now it comes down to what would I like to see happen? I'd like to see us hang out here for 2 or 3 days. I'd like this to stay this way until Tuesday, Wednesday, Thursday. Just floating around there. Because The 8 moving average is going to start moving up and ultimately doing that as you're doing this. Now I've got a good catalyst. I don't have one right now because we're all the way down here. We got this line, the swing high, the super fib, all of them I've got to get through. Right? So I would very much love to see everything settle down for a little bit, go sideways. But Rob, don't you just want it to make all-time highs again? Yeah, but it doesn't have to be today. Patience grasshopper. That's just it. Wax on, wax off, whatever way you remember to say it. Right? I don't need it to happen today. I need it to happen, but it doesn't have to happen today. Right? But you want to be paying attention because it's going to happen and you've got to be noticing it. So Les said, should we factor in that the Fed says they need another Fed rate drop? So we already are anticipating, the market has built in, hey, Jim or Trip or somebody, can you guys tell me what the chance of a quarter point cut this month is? But we've already got baked in, and if you know what it was yesterday or Friday, rather, it doesn't have to be perfect. Close enough is close enough. It's already baked in right now. Les, the bigger concern is what happens the next time in the new year. What is the expectation of the forward-looking statement? And they'll go out and give you this month it's a 72% chance we're going to have a 25 basis point drop. And next month it's a 47%. Next month is a crapshoot. You can't do that. You need to hear what the reasoning behind this month was before it really means anything whatsoever, if that makes sense. So 87.6%, thank you guys, much appreciated, for a 25-point drop. Everybody that dropped it in, thank you, very much appreciated. 87% that we're going to have a quarter point drop. It's baked in. The bigger question comes in, Les, if it doesn't drop a quarter, that'll be Wall Street freaking out. So the expression is buy on rumor, sell on news or fact. The rumor is we're going to drop a quarter point. The fact is we dropped the quarter point. Right? At that point, there's no news any longer. There's nothing to keep it up, keep the market up. But now what happens? We look for what the Fed has to say. Oh, we're expecting more of a dovish market, and over the next 3 months, we think we'll see 2 more quarter point drops over the next 3 months. Oh, well, that's interesting. Or, yeah, we're done. We don't believe there's going to be any more drops now. We're going to wait and sit back a little bit and see what happens, but we think we're okay. Now, with where interest rates are right now, things have definitely loosened up a little bit. Mortgage rates are 6.25%. That was right about where I bought my first house, was 6.25%. Right? Would I like them lower? Yes. Are we ready for them today? I think we can go a little bit more. Can we drop another point off of it today? No, I don't believe so. I think we're talking about all kinds of economical issues stemming from that potentially. So we got to be very, very careful. Trip said that percentage has been quite volatile over the last 7 to 8 days. Yeah, it's every time somebody says something. Ooh, what if the president does this? Ooh, what if Russia or Ukraine do that? Every time somebody says something, open mouth, insert foot, we've got the factor of that, moving the market around. Gwen said, have you ever used the 15-minute chart to determine trend for the day trading, or do you always use the daily charts? If you have, what has been the difference, if noted in terms of how the trade is going? So Gwen, and I don't have TradeStation open just because I'm finding way too much of a bear right now. Every time I have it open with Zoom and Omega charts, it crashes. So, but basically, here, let me do it this way. Notepad. Gwen, my charts that I use on TradeStation look like this. It's a 1, a 5, a 15, and a daily chart. So 5, that's my primary chart. Right? That is what I look at intraday. Daily chart, that's the decision maker. That's my end of day decision maker. I need to see the pattern on a daily chart. Then I take it over to this. And what am I looking for? Let's say end of day, we were making this move up and we got a bounce today. There's a key level of support in there. There's a moving average in there, right? Life is good. We're a bullish bias rank of 1 right now. Okay. So now what? Well, now tomorrow, because this was end of day Monday, now Tuesday, I'm going to come over to the 5-minute chart and I'm going to be looking for, here's the cutoff from the previous day, where we had to run up into there. I'm going to be looking for what this stock does next. If we get a continuation push off of an end of day level, this level here came from this level here. I'm not drawing lines off of the 5-minute chart. I'm drawing off of the daily chart. Okay. Came off of there. So if we're moving in the right direction, this gets noticed from me. Okay. I'm going to look at the 15 just to make sure that we've got an overall bullish pattern to it. We had it on the daily. I want to make sure that 15, which is my next longest time frame, is not showing weakness and starting to roll over. My 5 is moving up, and I'm going to use the 1 as an opportunity to tweak the trade. Just I'm waiting for that little finesse, that small little adjustment, as it were, of all right, time to take that trade. So I use all 4 of them in conjunction, together there, on that position. All right, or for this position, Gwen. So does that kind of help? Does that answer it for you? Sort of. Tell me what doesn't make sense. So yes, I use them. I use it, but it is not a primary chart for me. Primary end of day would be this. So this is the first chart I ever look at is end of day. The second chart I ever look at is 5-minute. The third chart I look at is the 15, because I'm looking for trend. I'm looking to try to make sure everything is in the same direction. My fourth chart is my number 1, my 1-minute. And that's because I'm ready to tweak into that entry. The 5-minute candle is a little too big. I can't tell if we really closed near a fib line or not. The 1-minute candle, I can see it. We're there. Go. Right? Let's see. Jim said multi-time frame trading. This is what I use. Same times on my 4 charts. Good, Jim. Yeah, it's a good time frame. The FOMC announcement, by the way, is December 10th. So thank you for that as well, Jim. All right. So Jim, you had said SPX. What do the weekly and the monthly charts look like in the support and the thoughts of the candles? Okay, so let's do that. Let's go over and look at those, Jim. All right. So first things first, let's go back to the daily chart. And let's make this only for here. So right now, we do not want this to show for all S&Ps, only here. Now let's go to the weekly. All right, so the last 2 are in there as well. Let's go back in there again. Edit. Let's change it. Oh, that one's not there, so it's not that. Let's see if this one is it. Yeah. Okay, there we go. So right now we had a good fib here. We gave it all back. We were waiting for a rollover on the monthly, Jim. We finally got it. Back here, this was what, Wednesday? Friday? Oh, no, not Friday. This is weekly, my bad. We finally got the rollover. So let's pull this back. Let's draw from this swing low to this swing high. Let's see. All right, I just got to be very careful here. I just hate doing this. So we've got 90 as a fibit for the day, 9 times 5. No, I can't do it like that. So Fibit is 170. Fibit's 170. Save it. All right, yeah, that's our actual daily. So this one should be weekly. I don't like changing these because it just messes up what it comes up with. All right, so 170 points, 64, 69. We got 500 points in there. Yeah, we need to split that in half. So we need in 118, we're going to need the negative 236, negative 136, or 118. I think I said the wrong number. All right, so there's our weekly chart, Jim, off of that high, that pullback. Not quite where I'd like it to be. Well, actually, we came down. We're fine. We came down past the Fibit, so we're okay. On the monthlies, wow, look at the super fibs, guys. Here, here, the next one here. Holy mackerel. Seen them all on the monthlies. I have nothing to redraw on the monthly chart. Jim, we're still in the same exact place. We're still in the exact same place. By the way, if I missed anybody's questions, please retype them in. Any of you that are following along with us on YouTube, by all means, drop those questions in as well. And, Andrew will get them off to me also. All right. So, Gwen said, my charts are set up like yours, but I never looked at the 15 minutes since using the pop system. I used it to get trend lines off of the 15-minute chart for day trading only. Okay. Yeah. So I don't promote it in pop because the only thing I use it for is what I call, Gwen, a Me Too indicator, right? Stochastics, RSI, CCI, DMI plus and minus with ADX. They're Me Too indicators. I'm looking at moving average, fibs, my setup of what I'm looking for with rank and bias. I'm looking at all of that. The 15 becomes a Me Too. Everything's pointing up. Is the 15 pointing up? Yeah, Me Too. That's why I'm looking at it. Because I could look at that one, and the one is bouncing right now, but we might be bouncing on the last 5 candles, but the 15-minute could be down for the last hour. And we're not getting a move up on that larger time frame before we step into the daily. So I still want to look at it to get that kind of an idea. Yeah, Jim said the weekly bounced right off the 21 EMA. Yeah, when it came down 3 weeks ago, right into there, Jim, exactly. Right in that level. It bounced. Okay. Good. All right, Gwen, good. I'm glad it's makes sense. All right, let's go back here. Let's go back here. All right, so upcoming events, guys, December 1st, that's today, Inner Circle, 7 p.m. SPX Cash Flow Q&A, that's 8 p.m. tonight. Mastermind is tomorrow. Monster Market Movers is Wednesday. Trading You is next week on the 8th. Pop covered call e-meeting are on regular schedule. Power Hour and Trading Coaches Playbook also on regular schedule right now. Remember, we're in a compressed 2 months. We've got to get everything done in 3.5 weeks because of the holidays. So we try not to do a lot around the Thanksgiving week. We try not to do anything the Christmas week. I'm teaching one class. I'm teaching Monster Market Movers that week of Christmas. I think that Monday night I'm teaching it there. Other than that, we're closed that week of Christmas completely. You'll hear more about that as we get closer. Join Power Option Plays. Guys, you're going to see some emails coming out on POP. All I can tell you is this. When you look at these numbers of what we're doing, and I call every one of these trades out, right? We're up $172,191. Take these. Here, you know what? Let me do this. Watch. I am going to move a copy, create a copy. Okay. So let's do this. Oh, I can't just do that. I gotta do it here. Data, sort, C. What merge cells? Come on now. What are we doing? Okay, let's try it again. Excuse me. We're going to go off of the entry price. Okay. So there's 3 lines up in here that are headers, right? We've done 357 trades here. I did not move over the ones from the open trade tab, but that basically gives us 360, right? So if we look at this and say, okay, I'm going to eliminate anything that's over $700, right? And what did I say was the total number? 357, right? 357 total trades, all right? So if I say, all right, let's go ahead and, you know what, heck, let's do this. Let's say anything over 500 bucks. We're going to eliminate every stock over $500. So we're going to get rid of these 206. I don't know why this does this. I don't know why my mouse disappears. Crazy. All right, so we got rid of anything that's over $500. Where am I? That basically means we're going to count here. We're going to go to, I don't know what I'm going. I just can't grab it. I don't know, guys. I don't know. Oh, got lucky. Maybe. I'm going to be off by 1 stop. No, I can't do it from that line, though. I'm trying to see is the P&L. If anybody knows why Microsoft does this, why it stops letting me see the mouse. Now, these are 1 contract trades. The function is invalid. Okay, good. Nothing like live TV. AI is trying to do it for you. Maybe. Try one more time, guys. Then if not, I'm just going to leave it. All right. So we're up $172,000 right now on the year, right? 172, 191. Of that, because this trades on the other page, not in here also, but there's about $60,000 with taking all of the higher price stocks out. So if you just learned how to do this pop system and just traded the ones that were under $500, you'd be up almost $60,000. 1 contract on all of them. So you trade in the lower, and could you go down to 400 and 200? And yes, you certainly can. Yeah, but the at signs always work, Jim. But I can try that. I could try with the equal the next time instead. Um, Bonnie said, "How much did you begin with that portfolio?" So Bonnie, on this, I think we did the math because they're all day trades. I think we needed $30,000 to do one contract trade, and that was to do everything. That was to do booking and Costco and Lilly and all of them, right? You would need a much lower number to get started off with if you cut out those higher price stocks. Much lower number. All right. So let me bring us back in here. All right, weekly training topic. Guys, sorry, we kind of got a little bit long-winded in a couple of extra things here today. I apologize for that. But when you look at a Santa Claus rally, I got all kinds of stuff popping up on my screen here. When you look at a Santa Claus rally, what are we talking about here, right? So it's basically it's the final 5 days of December plus the first 2 days of January, right? So a total of 7 trading days is what we're looking for of when the market tends to rally, right? So what you're going to see, and I just took some notes because I want to make sure I hit all of these points. You're going to see lighter trading volume in there. Uh, People taking tax losses, writing stuff off at the end of the year. Why? Because I bought Meta at $400, it went up to 800, and I sold it, and now I've got all of this tax gain. I need to offset that with a loss, so I'm going to sell some of my dogs against it to reduce that. So you're going to have some tax harvesting taking place in there. Um, Sectors linked to holiday spending, so retail, consumer, spending, things like that are always going to be big. Positioning for a January effect, which we'll talk about another day, but basically it's some front running. Uh, Overall investor sentiment, macroeconomics such as Fed interest rates, right, are a big part of it as well. So you're looking at historical patterns. You want to go back and be able to look at what's happened in the past, right? For either targeted indexes or stocks, I like it better on ETFs personally, but how they've behaved in the past, right? Stay disciplined with risk management. Do not get laps in here. And you got to watch for positions closely that they actually are moving the way they're expected. Now, that Santa Claus rally is not a big move. It's a one, maybe you get up to a 2% move. It's not a big move. The thing behind the Santa Claus rally is not how much is it going to move. It's that the expectation is we're going to get a bullish move. That means I should be focused more on those bullish positions and trying to capitalize on news that's related to a company that happens around the time of that Santa Claus rally, right? So those 7 trading days, last 5 trading days of the year, first 2 trading days of next year. And what people miss, if you do some research on the psychological component behind it, I've found from more than one person psychologists talk about that everybody's happy, right? It's Christmas time, it's holiday season, you're off from work, you're getting a bonus, you're seeing family. Life is good. It's maybe crazy, but it's good, right? So just offsetting what's happening out there, that overall bullishness, not the word I'm looking for, happiness of sentiment of people tend to be an expectation of why the market pushes the way that it does. No, no, Trip, no. Um, so Bonnie said, so I could probably do that with as much as 30 or 40,000. Yes, Bonnie. Yes, exactly. All right. I think I got all the questions. Guys, we kind of ran out of time, so I apologize for that. But I thought that the bias section was critical. Did anybody find that section helpful? Give me a 1 for yes or 2 for no. You guys have kind of been a little muted today with those. A lot of you have participated. Don't get me wrong. I appreciate it. Yeah, Wall Street bonuses. There you go, Brian. Exactly. Yep. Excellent. Well, I appreciate it. I appreciate it. Thank you so much, everybody. All right. Hey, everybody, have a great rest of your day, and I will see you all at our next update. Take care, folks. I will see you soon.